Short squeeze, hedge fund, Robinhood. What is going on with GameStop? There's tons of questions floating around the internet, and I would like to give you answers in as simple terms as possible. If at any point during this video you hear my cats running in the background, don't mind them. It's the middle of the night because I felt such an urgency to make this video and film it right now. So they're going crazy. I should be sleeping right now. Let's do a quick summary of what has happened. A user on popular social media platform Reddit has made a post that has since gone viral about hedge funds shorting GameStop stock. Now that was already a mouthful. After that, a lot of people all over the world started buying shares of GameStop in order to inflate the price and therefore harm the hedge funds, make a profit for themselves. Let's start with where it all began. GameStop. GameStop is a company that sells video games in traditional brick and mortar stores, for example, in your local shopping mall. So what is stock? Stock is simply a representation of ownership in a company. So if you own part of a company, you also own part of its assets and part of its future revenues. Of course, in proportion to how much of the company you own. All of this can be represented in stock, which is then bought and sold on the secondary markets. Secondary markets will be important later when we explain how this mechanism affects GameStop. Supply and demand dictates the price of this stock. So if a lot of people want to buy it, the price goes up because it's more popular and thus you're able to charge more for it. So now that we know these fundamentals, what is short selling a stock? You can imagine it go down in the following way. I have this really cute mug here and it currently goes for $10 on the market because it's so cute. But what people don't know is that it's actually made of really bad materials. So I think people will soon realize it and the price of this mug will go down to $5. Watch me do this. Hi, can I borrow this mug from you? I'll pay you for the hassle of lending it to me. Okay, so now I borrowed this mug that I don't own, but I'm gonna sell it to somebody who wants to pay $10 for it. Hey, I heard you wanted to have this mug. You can have it for $10. Here you go. Thank you. All right, I got $10. That's awesome, but I still have to return this mug to this other person. I mean, now that my prophecy has been fulfilled and everybody noticed how bad the quality of the mug is, it now only goes for $5 on the market. Let me just buy it back so I can return it. Hey, cute mug you have there. I'll give you $5 for it. Yeah, I know that's very low, but that's what I would pay for a mug of this quality. All right, thank you. Here you have $5. That's awesome. I just received $10 and I gave $5. This means that I made a profit of $5. Oh, wait, I have to return this mug. Oh, hey, here's this mug bag that you wanted. Yeah, here. And here you have $1 because, you know, of the hassle of lending it to me. So this is how it works. I just shorted this mug and I made a $4 profit. Cheers to that. Okay, so now we know that you can short a stock if you think that the price is going to go down and still make money from it. This is what these hedge funds have been doing. They thought that this company that sells video games in brick and mortar stores is not worth that much because the future is streaming video games, just like we stream movies online instead of buying or borrowing the physical copies now. One of the companies that has gotten a lot of news lately is Melvin Capital, which is a hedge fund. This hedge fund receives money from investors, which are usually professional investors or extremely rich individual investors, in order to then make those investments and make those bets and make these investors money. Hedge funds are called hedge funds not because they have anything to do with landscaping, but because back in the day, there was only one type of hedge fund, namely the one that would have a strategy to hedge your risks, to hedge your risks, to limit your risks. Nowadays, there's a lot of different types of strategies that hedge funds employ, one of them being short selling. Some of these hedge funds have been betting on GameStop stock going down, so they have been short selling it. That was one of their strategies. And when that Reddit user exposed the strategy, a lot of people wanted to take advantage of that and create what is called a short squeeze. So what is a short squeeze? In our little mug buying scenario, imagine it that way. So you know how I borrowed the mug from somebody and I promised them I will give it back to them? And then I sold this mug for $10 to somebody else. But now I'm short one mug. I need to buy this mug back in order to return it to my lender. In this moment, the short squeeze can happen. So now I'm mugless. I need to return this mug, but the price of the mug went up to $15. And I have to go to the market and I have to buy back this mug for $15, therefore making a loss of $5 in order to return it to my lender. And by buying this mug from the market at this higher $15 price, I might even be participating in increasing this price myself. How so? Supply and demand. If a lot of people are demanding to buy this mug, the price goes up because the sellers now can choose who they can sell the mug for, and they will pick the person who bids the highest. So all of these people on the interwebs were buying GameStop stock, therefore increasing the price of the stock, orchestrating a short squeeze which harmed hedge funds that were short selling the GameStop stock. That resulted in several billions of losses already. Now you might ask yourself, why would the hedge fund not just hold on to the GameStop stock and not sell it until the prices go back down? Now, the answer to that is not that straightforward because there's no expiration date on short selling. However, the borrower, so me, I have to pay the person who I was borrowing the mug from a certain interest, and I had to leave them some collateral. So this person didn't want to give me the mug without me giving them something else so that they can be sure that I can, in the end, return this mug. So when they gave me this mug, I gave them this little teacup. And now the person I borrowed from holds this collateral, this teacup that is very dear to me and also goes for $20 on the market, in order to make sure that I will return the mug. When they see that, oh my god, Anami doesn't seem to be able to return this mug, they have all the power to just liquidate the position and sell the collateral that I gave them, in which case I make a loss. I hope this little analogy with the mug made it more understandable what's going on with the GameStop. And I hope you understood that the mug is a metaphor for GameStop stock, that I am the hedge fund. The people who are driving up the price of the mug are Redditors, and the person who I borrowed the mug from are other financial service companies that we don't need to worry about in this video. Now, to top it all off, I want you to understand why this short selling game is so risky. When I'm in this position that I borrowed the mug and I sold it off, I'm now short this one mug and I have to return it to the borrower, I could potentially make an infinite loss. Why? Because technically the price of the mug could shoot up to infinity. It could go beyond $10, beyond $15, it could go to $1 million and more. There's no limit to the losses that I could make. Hence, short selling is super risky, which is also why the person who lended me the mug in the first place wanted that collateral, because they know how risky it is. With all of this going on, it really feels crazy that such a big hedge fund that's worth billions of dollars was losing money because a bunch of people on the internet decided to troll the hedge funds. So what's going on with all of these normal people like you and me who are buying GameStop stock? They are flooding the markets with their orders on apps such as Robinhood. Robinhood is an app that allows everyday people to buy and sell stocks for free. Sounds really amazing, right? Except that there's a caveat. People were trying to buy GameStop shares through Robinhood. Robinhood suddenly shut down all buy orders and only allowed people to close their positions, so to sell their GameStop shares. There's a harmless, risk minimizing explanation for why Robinhood would do something like that. However, there are some facts that just don't add up right and that really got people aggravated. So not only are people mad because now they can't buy the stock that they thought they were going to be able to buy, their orders got canceled and they can only sell their stock, there's also something else going on behind the scenes. Well, there's an indirect link between Robinhood and companies like that and Melvin Capital, which is a hedge fund that shorted GameStop. In order to make a profit, Robinhood sells the trades that you and I are putting into the app to professional financial services companies that are then able to make a profit on these trades. We don't need to go into the details, only that it's another financial services company receiving trades from Robinhood. And so now comes in this crazy part. One of Robinhood's clients is called Citadel Securities. This is a sort of sister company to Citadel LLC, different company. Citadel LLC is a hedge fund, remember what a hedge fund is, which invested money in Melvin Capital. And it just so happens that Citadel LLC and another financial services company bailed out Melvin Capital for about $3 billion. So now that you know the link between GameStop being shorted by Melvin, which got bailed out and invested in by Citadel LLC, which is a sister company of Citadel Securities, which is a really big client of Robinhood, it suddenly makes so much more sense that Robinhood would suspend trading on GameStop and other companies. There are legitimate reasons to that as well. It's just too much of a coincidence, don't you think? People were rightfully outraged when Robinhood straight up suspended them from buying GameStop stock and other stocks. They felt like they were being lied to. They felt like Robinhood was punching down, taking from the poor and giving to the rich. And Robinhood's action actually did decrease the price of GameStop. So obviously their actions had a strong influence on the GameStop price, which then probably also had an influence on Melvin Capital. Very interesting how all of that works out if you ask me. Now, I was using Robinhood as an example, but there were other companies that were doing similar things, making it really hard to buy GameStop and other stocks. However, Robinhood is the one that came under the spotlight, not only because their name is Robinhood, also because they straight up suspended the trading, and there are some lawsuits being filed against them right now.